Guys, it's finally happened. Major transactions are finally starting to come to the junior mining sector, or at least one major M&A deal. Lumina Gold has entered into a transaction to be acquired, and as if that isn't enough, it's an all-cash deal, which quite frankly is a rarity in this environment. So what's the details? Let's dive in. Lumina Gold on Monday agreed to be acquired in an all-cash deal valuing the gold developer at $581 million. The figure represents a premium of about 71% based on the 20-day volume weighted average price of the equity, and a much less dramatic 41% premium to Friday's close. We'd like to hypothesize that the recent rise in the valuation suggests some leaks may have been afoot. But quite frankly, the jump in the price of gold has been insane, and it easily could have been what drove buying in recent days. Lumina is set to be acquired by CMOC Singapore, which is a subsidiary of the larger CMOC Group Limited. CMOC was previously known as China Molybdenum Company, and is one of the largest producers of molybdenum, tungsten, niobium, and cobalt, which might give investors pause given Canada previously targeting Chinese investment in the resource sector. But the reality is Canada's government doesn't care about investment in gold projects, because gold isn't a critical mineral, but rather just a store of wealth. Anyways, the transaction isn't subject to any finance by CMOC, and in the interim, the Singapore Chinese entity is to provide Lumina with $20 million in the form of convertible debt in an effort to continue to fund the development of their flagship asset while the transaction goes through the motions. CMOC has already secured 52.3% of the 66 2/3 majority they require for the transaction to be completed, and it's unlikely investors say no to the cash payout in this environment. If they do in fact turn it down, Lumina will be required to pay out a $23.3 million termination fee. The transaction is expected to close in the third quarter of this year. So the big question here is why Lumina? Lumina is behind the Ecuador-based Cangrejos gold copper project, which the company is currently in the process of completing a feasibility study on. That study was previously scheduled to be released in the first half of this year after seeing work begin on it back in 2023, which follows the completion of a pre-feasibility study. But given the buyout, it wouldn't be shocking to see the report go unreleased at this point. More on that in a minute. In addition to being in the late stages of development, the company is in an area ripe with M&A transactions, and now it seems China wants in on the fun. Back in 2018, Lumina spun out Luminex Resources, which held a bunch of assets in Ecuador that weren't the Cangrejos project. After a few years of development, Luminex last year merged with another Ecuador-focused developer, Adventus Mining, in a transaction that was to consolidate one of the largest exploration portfolios in the country. Before the ink even dried on that transaction, Adventus itself was then targeted for acquisition, with Silvercorp buying up the company 6 months later in a transaction valued at $200 million. Solaris last year, meanwhile, managed to secure a $130 million investment in their copper project from Zijin Mining, before the Canadian government put a stop to it over national security concerns, despite the project being thousands of miles away from Canada's southern border. In other words, there seems to be plenty of interest in the region when it comes to M&A as of late. Okay, so let's get into the core of it. The massive gold-copper project that Lumina has been developing for years. To get a sense of the size here, Lumina's Cangrejos project is the 26th largest primary gold asset in the world by resource, and the 13th largest undeveloped primary gold deposit by gold production capacity. If you recall, we recently did a video on Newmont's strategy of only focusing on big Tier 1 assets with a mine life measured in decades and annual production near the 500,000 ounce mark. Cangrejos fits those specifications. As per a pre-feasibility study released in 2023, Cangrejos boasts a US $2.2 billion net present value and a 17.2% IRR, which is based on a study conducted at $16.50 an ounce gold and just $3.75 a pound copper. Just for the record here, the price of gold is now literally more than double that figure, so these numbers are small. That study was based on an open pit operation that would produce 469,000 ounces of gold equivalent over a 26-year mine life at cash costs of $602 an ounce and all-in sustaining costs of just $671 an ounce, net of byproduct credits. Broken out, those equivalent ounces are said to be 79% gold, 20% copper, and 1% silver, with gold production specifically estimated at 371,000 ounces annually over the life of the mine. Gold grades over the life of the mine are estimated at 0.55 grams per ton, while copper grades are about 0.1%. And in terms of processing capacity, the operation is expected to process 30,000 tons per day from years 1 through 3, which then steps up to 60,000 tons a day in year 4 and 80,000 tons per day in year 7. Initial capital costs for the project are estimated at a rather modest $925 million, while expansion costs are estimated at a combined $453 million. Life of mine sustaining capital, meanwhile, is pegged at $598 million. In terms of mineral reserves, Cangrejos has proven and probable reserves of 11.56 million ounces of gold, 1.4 billion pounds of copper, and 14.4 million ounces of silver. On top of that, indicated resources total 16.8 million ounces of gold, 2.2 billion pounds of copper, 24.3 million ounces of silver, and 42.4 million pounds of molybdenum. Finally, inferred resources sit at 3.7 million ounces of gold, another 500 million pounds of copper, 7 million ounces of silver, and 7.6 million pounds of molybdenum. In short, there's a lot of metal here, and it can be mined cheaply. That being said, we should add that post-release of the pre-feasibility study, Lumina entered into a transaction with Wheaton, whereby Wheaton has agreed to provide $300 million in cash in exchange for a 6.6% stream on the payable gold production until 700,000 ounces have been delivered, after which the stream is reduced to a perpetual 4.4%. At the time, the stream was said to reduce the NPV on the project by $190 million and the IRR by 1.5%. 1/3 of that stream can be repurchased in the event of a change of control, such as in the event of a buyout by a Chinese mining conglomerate. All right, guys, we're getting a little bit long in the tooth here, so let's wrap it up. Well, the sale of Lumina is a positive development for shareholders. Truthfully, it might not be one of the best looks for the junior mining sector. Cangrejos is a massive project whose economics in this environment are absolutely insane. The fact that the project is nearing the start of construction and is sold for just $500 million might not be the best thing that we're going to see for the junior mining sector, especially considering the project has north of 30 million gold ounces in the ground across all reserve and resource categories. It equates to about $18 per ounce in the ground. Well, gold on Monday crossed the $3,400 mark. But it's a start to a major M&A cycle, and overall, that's a good thing. So let's hope that the good times continue, because I have a feeling that they're about to just get started. All right, everybody, thanks for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Guys, if there's stories you want us to cover, let us know in the comment section. I hear earnings season is coming, so get ready, guys, because we're about to ramp up our mining coverage. Thanks for watching, everyone.